Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. This week, Mortgage Matters in Minutes has been a conversation that's been happening for many years. And now that we're in a new year, where are mortgage rates going in 2024? And we're here to give you the scoop and the skinny of what's going to transpire this following year, to give you the facts and what we see that's going to happen. Obviously, last year, many experts believe that rates were going to start coming down in May, and that just didn't happen. The Fed had a little bit different ideas on how to slow down the economy and actually keep things a little bit more in check. And hopefully we hit this soft landing, as everyone refers to, in a recession. So today we're going to talk about a brief overview of where rates have been at and where we're going in the Omaha metropolitan area for mortgage interest rates for residential housing. First, let's talk about how mortgage rates are set. They are an investment. They are an investment for your 401ks, for pension plans, retirement plans, any investments. They are such as, many people think that when you obtain a mortgage, you're getting that mortgage specifically from the mortgage company, bank, or credit union that you're going through. And they're keeping that loan and keeping all that interest. But that's not all completely true in how mortgages completely work. Really, mortgages are a very safe and secure investment when underwritten properly and all variables taken out, unique variables taken out, and looked upon in every single loan equally and every consumer the same. So really what they're looking for is whether rates are at 3% or 10%, each investor wants their same margin. They don't care about the 10%. They're not getting a 10% rate of return or a 3% rate of return. They're marking up just a little bit of that scenario to carry on that mortgage moving forward. So what have we seen? We've seen rates during the pandemic at all-time lows, and those gradually got as high as 8.5%. Since December of 2023, and now that we're in January and pushing into February here, rates have come down significantly. And we are looking at the mid to upper 6%. So we've dropped about 1% to 1.5% over the last month and a half. And that's huge in regards to buyers purchasing homes. And we've seen a huge impact of the markets being much more busy during this time of year than normal because of interest rates alone. So what are we seeing here happening in 2024? The Fed, we feel, has really taken control and increased interest rates, and so do the Federal Reserve feel that they've done enough to combat inflation and slow that from happening. We do think we're going to see some rate cuts this year, and the Fed fund rate, again, as we've chatted about before, does not equal mortgage interest rates, but it's a good path to kind of follow. We do anticipate rates coming down to lower sixes, upper fives by the end of this year. That's what people want to hear, and we do think that's going to happen. We're going to see a lot of activity throughout the year as interest rates start to come down, because there's been a lot of people sitting by the sidelines, not necessarily all deciding to do what they want and make the right decisions because of interest rates being higher. Nationally, we have a lot of things going on. As we can see during an election year, people generally pause their decision making, and after the election year happens, interest rates generally have always decreased. We've talked a lot about this as we go into recessions, and we probably are still going into that recession, whether it's a big one or a small one. We know now that mortgage rates fall as we hit a recession. And I do think we're going to see some kind of recession this year. No one wants to talk about how big or how small, but every time a recession occurs, interest rates fall. And we're seeing all the trends that point to that. Activity being down in many markets, many different scenarios and formulas that we follow to signify what is going to occur for a recession. So 2024 should be an awesome year for interest rates. They should keep coming down. But the negative here is, as rates come down, we're going to see much more activity from buyers, meaning we're going to have competition again on houses. And that's not going to happen here just locally in the Omaha metropolitan area. That's going to happen nationally, because we still are very, very low on inventory for the amount of properties that people need here in the United States. But positive news, rates are starting to come down, and they will continue to go down. We see many factors, unemployment starting to tick up, and other things that are happening as well too. So If you have questions about specific details, don't always necessarily listen to the media. There's lots of factual stories out there that show the truth, but we will see interest rates lowering again from that 5 to low 6s is where we're going to see interest rates be at by the end of 2024. It might take a little bit of time at the beginning of this year since we've seen a huge drop for them to continue to go down, but later this year, we're going to be reaping the benefits and you're going to be refinancing those higher interest rate loans into a much more normal mortgage rate for the long term. Hope we educated you a little bit here today of what's happening, what's moving forward. And we're always just a phone call away at 402-991-5153. Apologize for the voice here late today. This time of year, a lot of sickness going on. So that's where I'm at. But you can check us out anytime on our website at mtg-specialist.com. And have a great week. We'll see you next time. Mortgage Specialists. Driven, trusted, reliable.